So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. And people had a real chance. And then more and more issuance came and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5 and then day 3 and then day 2 and then hour 5 and then hour 2 and then hour 1 and then 30 seconds after launch. So they've got faster and faster and faster and faster and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013. The issue being is that everybody's getting destroyed by this. So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. And people had a real chance. And then more and more issuance came and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5 and then day 3 and then day 2 and then hour 5 and then hour 2 and then hour 1 and then 30 seconds after launch. So they've got faster and faster and faster and faster and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013. So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And we can then have a cleaner market. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy, because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. So how we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stablecoins tend to be larger single transactions. You know, if you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution, and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size. So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective, because that's one of the large communities of Web 2, social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I mean, a big game can have 1 billion users. A big pop star has 1 billion fans, a big sports team has 1 billion fans. So these are very big things.
So if you're looking at RWAs just in general, especially around the stance of Solana and Avalanche, are you picking one of those to be maybe one of the market leaders?
No, I mean, I know John Woo from Avalanche well. John's come out of the traditional finance space, the hedge fund space, like myself. They're very well positioned in real world assets. They've been working on this for a long time. But we've already seen Solana do some. ETH will obviously do a lot because it's kind of the proven one here. We know that Sui has been working with Franklin Templeton. So I think it'll get spread across. I actually think the real world asset majority will be in the EVM system, just because you don't get fired for it. You're not taking a risk. It's like having Microsoft go into any bank, any asset management firm. It's all Microsoft and not Apple. And the reason being, that's the easy decision to make. So Avalanche, I think, will continue to do this. They've got the other side of it as well, because they've got gaming as well. So they had the off the grid game, which is huge, which I think is very important. So my view is Ethereum have overbuilt block space for current demand. So we've had layer 2s, we've cheapened the layer 1, so it's not accruing so much. Now, let's go to a forward for a world where 3 billion people are using blockchain and EVM's capturing a large share, right? It's now scaling massively because of layer 2s. It's then generating enough income on the layer 1 that you're generating revenues across. We're just not there yet. So we can argue all day about the technicalities of what Vitalik and the Ethereum Foundation are doing. The reality is they're building something that's going to be massively scalable in due course, and differently so than some of the others like Solana. So it feels that ETH is struggling, it's non-performant, it's not great. My guess is by the time the financial system steps in and starts building, and they start using layer 2s to build, and we start accruing value in the layer 1s, using these reduced gas fees but much higher volumes because they're coming through from the layer 2s, I think it'll all work out fine. Short term, what has been launched is basically testing of ideas and really ChatGPT wrappers plus rewrapped Telegram bots. Not that interesting. But obviously, Brian Armstrong was out on the tape again talking about this today, agents are going to use crypto payment rails. You need to pay an agent. If you think of an agent like somebody on Fiverr you go to make a deck for you or whatever it is, right? You have to pay them for their time. And including their time is their profit margin for their light and rent and living and stuff like that. With agents, you're going to pay for the compute and you're going to pay for the electricity. And then maybe a profit margin if it's a private agent. So that really can only get done in crypto rails, because if you look at the speed of how ChatGPT does these things or any of these AIs, it's instantaneously. They'll get, we'll see it coming out soon where we will be using 10, 20, 30 different agents to do a simple task like booking an airline ticket, right? That actually has a lot of stops and booking your Uber to the airport, all of that stuff. So there'll be payments for all of this. I think EVM will do fine for payments on this stuff. On a layer 2 or something, because it needs to be performant, it needs to be fast, cheap. So yes, look, the longer term, this is a very, very, very big deal. There's only 8 billion humans, there's infinite AIs. And infinite AIs using infinite blockchain wallets equals, infinite market cap of crypto over time.
What would you suggest if you had Elon's ear right now? What would you say? Hey, let's do a variety of blockchains for different, scenarios. How would you play it?
Probably a variety of blockchains, just because it's net good for the United States. You don't want to be a maximalist at government level because it's too important. But certainly, things that need to be truthy can get truthier very quickly. Economic data is one, right? There's always the argument, and has been for as long as I've been in markets, economic data is manipulated. Well, once you put it on chain, it can't be. It's provably so. So we can do it with that. We can do it with spending. We can do it with budgets. All of this can go on blockchain. Now, let's see how brave they actually get versus what they say. But I think economic data might be. But there again, Trump might say, that I actually just want to massage the data myself. So people say they want truth, but it's not always clear that they do. Yes, I think it's a big deal for this cycle, because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology, but it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which will be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going.
Welcome back to the Market Chronicles, your weekly deep dive into the most interesting stuff happening in finance and markets. If you're watching us on YouTube, don't forget to hit that subscribe button so you don't miss out on more insights like these.
Definitely.
This is episode 8.
Episode 8.
And we're breaking down Raoul Pal's predictions for the future of crypto.
Always exciting.
Always exciting, especially, his thoughts on how everything will play out as we head into the 2026 crypto cycle.
Right.
So Raoul Pal, he's made some really interesting observations about the meme coin space and how it seems like the opportunity to really make significant returns there has diminished over time.
Yeah.
All these new coins popping up all the time.
Yeah, and it feels like, there's so much potential for insider trading that it's hard for the average investor to get in early anymore.
Exactly.
And this has kind of created, as Raoul calls it, this sort of financial nihilism, especially among younger investors.
Yeah.
They're just jumping in and out of these meme coins so quickly. It's almost like they've detached from real world value.
Yeah.
Who knows? Some of those meme coins like Dogecoin might stick around just because they've got a strong community.
Yeah.
But their long-term potential, I think that's still very uncertain.
Yeah.
Raoul really emphasizes that the real key is what he calls network value.
Yeah.
It's about the number of users on a platform and the total value of all the transactions happening.
And that makes a lot of sense.
Which is why Bitcoin and Ethereum are still on top.
Yeah.
They have the users, they have the volume.
The fundamentals are there.
Yeah.
Now, Raoul's also pretty bullish on the potential of bringing real-world assets, those RWAs, onto the blockchain.
Right.
And he's particularly interested in what Solana and Avalanche are doing in this area.
Yeah, he sees it as a growing sector, but he doesn't think it'll be winner take all. He thinks Ethereum might be the platform that institutions gravitate toward. initialers because of its reputation, and how widely used that EVM system is.
Familiarity.
Exactly. Especially when you're talking about institutions managing billions of dollars.
Right.
They want something stable, secure, something with a proven track record.
Yeah.
And that's what Ethereum offers right now.
Speaking of Ethereum, Raoul seems very confident in its long-term potential.
Yeah.
Even with the scalability issues we see today.
Yeah.
He believes that their focus on those layer 2 solutions will be key to handling, the huge transaction volume we're expecting in the future as more people come onto the blockchain.
Right. He sees Ethereum's approach as different from Solana, for example.
Okay.
Solana is all about speed now, but Ethereum is building for, really massive scalability in the long term. Think of it like this. Layer 2 solutions, they're like adding extra lanes to a highway.
Okay.
They can handle a lot more traffic, a lot more transactions without messing up the main highway.
The main Ethereum layer.
Exactly.
So then gas fees should go down as these layer 2 solutions take on more of the load.
Right.
And that should attract more users.
More users and drive up the value of Ethereum.
Right, and this long-term vision is where things get really interesting because Raoul also believes that AI will play a huge role in driving crypto adoption.
Huge, yeah.
He even suggests that it could lead to an infinite market cap for crypto.
Yeah.
It sounds a bit crazy.
It does, but his thinking is that as these AI agents get more advanced, they're going to need a way to pay for the tasks they're doing.
Okay.
Crypto, with its speed and efficiency and its ability to handle micropayments,
Right.
it's perfect for that.
Yeah.
Imagine AI agents booking your travel, managing your investments, even writing code for you.
And then paying for all those services using crypto.
Exactly.
This is the future Raoul sees, and it's a future where those EVM-compatible layer 2 solutions we talked about could be super important.
Yes.
It sounds like we're on the verge of a really fundamental shift where crypto goes from being just an asset class to becoming like the infrastructure of a new AI-driven economy.
Right.
It's pretty mind-blowing. But what does all this mean for investors like us as we head towards that 2026 crypto cycle?
Well, for one, we need to keep a close eye on what's happening with regulation.
Especially in the U.S.
Especially in the U.S. Raoul says clear guidelines are crucial for getting those big institutional investors on board.
Right.
The ones that can really push this space forward.
It's all about attracting that big money.
Exactly. And we might also need to rethink our expectations about the timing and volatility of this next cycle. Raoul thinks the 2026 cycle might peak later and be less volatile than the ones we've seen before.
Okay.
This could be because of a few things, the current market conditions, the growing institutional interest in crypto, and the potential for things like Bitcoin ETFs to finally be approved.
Right.
A Bitcoin ETF would let people invest in Bitcoin through their regular brokerage accounts.
Just like they invest in stocks.
Exactly.
It makes it so much easier.
Much easier, yeah. And then there's the possibility of Bitcoin being integrated into 401k retirement plans.
Yeah.
Imagine millions of people putting a portion of their retirement savings into Bitcoin.
Wow.
That would definitely change things.
It would be huge.
It would create a constant stream of demand, which could really smooth out those boom and bust cycles we've seen in crypto.
So the next cycle might be longer, less volatile, and driven by a wider range of investors. This could really catch some people off guard, especially those who are used to those dramatic price swings we've seen in the past.
Yeah.
Understanding these potential shifts is going to be crucial for anyone who wants to navigate the crypto market successfully in the years to come.
Absolutely.
We'll be back in a bit to dig deeper into Raoul's analysis of Bitcoin's potential downside in this next cycle.
One thing that really stands out about Raoul is how he focuses on the bigger picture.
Yeah.
He doesn't just look at crypto on its own.
Right.
He connects it to macro trends in the global economy,
Right.
like interest rates, inflation, demographics, technological advancements.
Wow, he sees all of that as playing a role.
Yeah, he sees all of these forces as shaping the future of crypto.
Interesting.
And one of the most significant macro trends he's looking at is AI.
AI, yeah, it's easy to dismiss AI as something that's way off in the future, but
Right.
Raoul's saying it's closer than we think.
Yeah, and crypto could be the key to unlocking its full potential.
How so?
Well, think about it. AI agents like self-driving cars or algorithms that manage financial portfolios, they'll need to interact and make payments on their own.
Okay.
Crypto, with its ability to handle those tiny micropayments so securely and efficiently, that's the perfect solution.
That makes sense.
Imagine an AI system that can automatically pay for the electricity it uses to run,
Right.
or a self-driving taxi that can pay for tolls or parking without any human intervention.
Wow, that's a whole new level of automation.
Exactly, and it takes decentralization to a whole other level.
It could really revolutionize so many industries.
Absolutely. And this brings us back to real-world assets.
Okay.
Imagine a world where you can buy fractions of real estate or fine art or even intellectual property all on the blockchain.
Okay, yeah.
These assets would be represented as tokens, and AI agents could manage and trade these tokens automatically, creating this truly global and liquid market for anything of value.
So anything could be tokenized.
Yeah.
Fascinating.
And Raoul seems particularly bullish on Ethereum's role in this future.
He does. Why is that?
Well, he sees Ethereum as the platform that's best equipped to handle this influx of real-world assets and the massive increase in transactions that'll come with it.
Right.
Remember those layer 2 solutions we were talking about?
Yes.
They're going to be essential for making this vision a reality.
So it's as if we're building the foundation for a new digital economy, and Ethereum is the bedrock.
I like that analogy, but it's important to remember that all of this potential depends on one crucial factor: regulation.
Regulation, right?
Clear guidelines, particularly in the U.S., are essential to give institutional investors the confidence they need to really participate in this space.
So regulation is often seen as this barrier to innovation. But Raoul actually sees it as an opportunity.
He does. He thinks that clear regulation could actually accelerate adoption by creating a level playing field and reducing uncertainty.
So it's about finding the right balance.
Right, between fostering innovation and protecting investors.
And speaking of navigating the crypto market in the coming years, Raoul's predictions about the 2026 cycle are particularly relevant.
Yeah.
He suggests this cycle might peak later and be less volatile than previous cycles.
That's right. He thinks factors like increased institutional participation, the potential approval of Bitcoin ETFs, and the possibility of Bitcoin integration into 401k retirement plans, that all of that could create a much more stable and mature market.
So it's almost as if crypto is entering a new phase in its evolution.
Yeah.
One where it becomes more integrated with the traditional financial system.
Exactly. And this could have major implications for investment strategies.
Right. If the cycle is longer and less volatile, investors might need to adjust their expectations and their timelines.
Right.
We might not see those parabolic price movements that we're used to from previous cycles.
Instead, we could see a more gradual and sustained growth trajectory.
Right.
Driven by wider adoption and institutional investment.
So new opportunities, but
new opportunities.
A different approach is needed.
Yeah, it requires a different mindset.
You know, it's interesting, Raoul's insights, they challenge us to think beyond just the short-term hype.
Right.
And focus on the long-term potential of this technology. He paints a picture of a future where crypto isn't just about speculation, but about building a more efficient, transparent, and accessible financial system for everyone.
It's a vision that's both exciting and daunting, but one thing's for sure. The crypto landscape is changing rapidly.
Fast.
And it's more important than ever to stay informed and adapt to these evolving trends.
Now, Raoul also has some interesting thoughts about Bitcoin's potential downside in the next cycle.
Oh, yeah.
He believes that Bitcoin might experience reduced volatility compared to previous cycles.
He thinks Bitcoin might only drop 45–50% from its peak.
Okay.
Which is way less than the 80–90% drops we've seen before.
Yeah.
This reduced volatility, I think, could be because the market's maturing.
Right.
There's a larger base of long-term holders who aren't as likely to panic sell when things go down.
They've seen it all before.
They have. This could be a real game changer for investors.
Yeah.
Because it would make Bitcoin a much more attractive long-term investment.
Especially for those who are worried about that extreme volatility.
Exactly. But this reduced volatility could also catch some investors off down.
In what way?
Well, those who are expecting a repeat of the past, waiting for the chance to buy Bitcoin at a huge discount during a crash, they might be disappointed.
Yeah, they might miss out.
It's a reminder that past performance doesn't guarantee future results. And as the crypto market matures, we need to be prepared for new dynamics and potentially unexpected outcomes.
We can't just assume things will play out the same way.
Right. And this is especially important when you consider the potential impact of things like Bitcoin ETFs and 401k immigration.
Okay.
These developments could further reduce volatility and attract a whole new wave of investors who are less familiar with how the crypto market works.
Right.
Imagine millions of people gradually putting some of their retirement savings into Bitcoin through their 401k.
Yeah.
That would create the steady demand that could really change those traditional boom and bust cycles we've seen.
It's amazing to think about how all of these trends and developments could come together and shape the future of the crypto market.
It is.
It reminds us that we're still really early in this technological revolution.
Yeah.
And the next few years are likely to be full of surprises, challenges, and opportunities.
Absolutely. And as always, it's crucial to be careful, to do your research, and to never invest more than you can afford to lose.
Right.
The crypto market is still very speculative,
Yeah.
and while Raoul Pal's insights are super valuable, they're not financial advice.
Right, of course not. So with that in mind, what are some key takeaways for our listeners as they navigate this ever-evolving landscape?
Okay, well, first, remember that network value is king focus on platforms with strong fundamentals, a growing user base, and a vibrant ecosystem.
Okay, good fundamentals.
Second, keep an eye on the macro trends, especially the development and adoption of AI.
AI, that seems to be a recurring theme.
It is. Third, understand that regulation isn't necessarily a bad thing.
Yeah.
It can actually be a catalyst for growth and maturity in the market.
Okay, regulation is a positive force.
And finally, be prepared for a potentially longer and less volatile cycle leading into 2026. This doesn't mean there won't be opportunities to make money,
Right.
but it does suggest that a more patient and strategic approach might be
The
needed.
long-term view.
Yeah, Raoul Pal's insights provide a valuable roadmap for navigating the future of crypto, but remember, the future is uncertain.
Yeah.
And the best way to stay ahead of the curve is to stay informed, be adaptable, and never stop learning.
Some great advice. And with that, we've come to the end of our deep dive into Raoul Pal's predictions for the future of crypto.
Wow.
We hope you found it informative and thought-provoking. Until next time, keep exploring, keep learning, and keep pushing the boundaries of what's possible in the world of finance and technology. So before we wrap up, let's circle back to Raoul's thoughts on those meme coins.
Yeah, good point.
What can investors learn from that whole saga?
Well, Raoul points out that the meme coin frenzy has definitely died down.
It has.
All those new coins popping up constantly, often with no real substance behind them.
Right, right.
It's become almost impossible for regular investors to find the real opportunities.
It's like trying to find a needle in a haystack.
Exactly, and it's a good reminder that hype and speculation can only take you so far.
In the end, it's about real value, right?
Right, real value driven by utility, adoption, those network effects we were talking about.
Exactly. So while meme coins might seem tempting with the promise of quick profits, they often lack the technology, the use cases, the community support
Right.
to really grow in the long term.
They fizzle out.
They do, and that's why Raoul says it's crucial to focus on projects with strong fundamentals.
Absolutely. And he sees Bitcoin and Ethereum as the prime examples.
Of course.
Massive network value, huge user bases, high transaction volumes.
It's hard to argue with that.
It is. And while those newer platforms are focusing on those real-world assets, Raoul thinks Ethereum, with its reputation and that EVM system,
Right.
will probably remain a dominant force.
Especially when it comes to attracting those institutional investors.
Exactly. They want stability, reliability.
It's interesting to see how these different parts of the crypto market are evolving
Yeah.
and how they might all come together in the future.
I think as things mature, we'll see more emphasis on interoperability, integrating different technologies and use cases.
It all starts to connect.
Exactly. And this takes us back to Raoul's vision of that crypto ecosystem powered by AI.
Right, those decentralized applications, autonomous agents, everything running on crypto.
It's a powerful vision, but it needs a solid foundation.
A scalable infrastructure.
And that's why Raoul is so bullish on Ethereum's potential.
He really believes it can handle the demands of the future.
Billions of users, countless AI agents, all transacting on the blockchain.
It's mind-boggling.
It is, but Ethereum's commitment to layer 2 scaling solutions,
Right.
that's what gives them confidence.
It's like adding lanes to that highway, right?
Exactly. More transactions flowing smoothly, lower costs.
Makes it more accessible to everyone,
Right, but of course we still need that clear regulatory framework.
especially in the U.S.
Absolutely. Raoul keeps emphasizing that regulatory
It's
clarity.
essential.
It's key to unlocking the full potential of this space.
Some see regulation as a hurdle, but Raoul sees it as a stepping stone to a more mature market.
Exactly. And his prediction about the 2026 cycle.
Peaking later, less volatility.
Right.
That really highlights the potential impact of those institutional investors, the Bitcoin ETFs, the 401k integration,
All of those factors could fundamentally change how the market behaves.
leading to more stable, gradual growth.
It's a whole new era for crypto.
It is, and it's a reminder that things are constantly changing in this space.
Absolutely. Investors need to stay informed, be flexible, adapt their strategies.
Raoul's insights are invaluable,
Yeah.
but we always have to remember that the future is unpredictable.
No one has a crystal ball.
Exactly. So as we wrap up this deep dive into Raoul Pal's predictions, the key takeaway is this. The crypto space is full of potential,
Absolutely.
but we need to approach it with a critical eye, keep learning, and maybe a bit of healthy skepticism.
Don't get caught up in the hype.
Exactly. Stay informed, focus on those fundamentals, and embrace that long-term vision. And you'll be well equipped to navigate this exciting, ever-changing world of crypto.
Could have said it better myself.
And that brings us to the end of another episode of the Market Chronicles.
It's been a good one.
It has. We hope you found it insightful and engaging.
Keep those questions coming.
We encourage you to keep exploring, stay curious, and always do your own research. Until next time, happy investing.